Okay, good morning, class. In this video, we are going to look at the types of business entities, which we mentioned in the previous video that we have three types. One is sole proprietorship. Two, have a partnership. Three, we have a company. So we mentioned these three types of business entities in the previous video. Now we are going to look at these types of business entities. One, let's look at the sole proprietorship. Sole proprietorship is also known as one-man business. This is a type of business where it's owned and managed by one person, and that person, the person who set up the business on his own or her own without creating a company. That is, he has to manage the entire business. That is why it's called one-man business, and we call it one-man business. It has some features that we can discuss here. However, one, there is no legal distinction between the proprietor and the business. This means that between the owner of the business and the business, there is no legal distinction. The business and that person is the same person, not like other companies where the business can sue and be sued. But in this case, the business and that person is the same thing, so there is no legal distinction between the two. This is one of the features of sole proprietorship business. And the profit of the business belongs to the owner of that business. It means the profit you generate in the sole proprietorship business belongs to the owner of the business. Whether profit or loss, whatever the case may be, belongs to that person. The assets of that business belong to that person too. The assets and liability of that business belong to that business or sole proprietor, and the business may be financed by a mixture of owner's capital and a loan. This case is whereby you can start this business with your capital, or you mix it with a loan, either from friends, family, or even from bank. So it's another feature of sole proprietorship business. And let's look at this scenario. Let's assume a supplier supply 1,000 naira worth of goods, but does not have the money to make the payment, and the owner of the business is personally liable to make that payment out of his or her other assets. What this means is you purchase a goods amounted to 1,000 naira, and you cannot pay this goods of 1,000 naira. What will happen at the end of the day? So you have to pay this from your personal money, from your personal assets, because this business and you, that is the owner of the business, is the same. So there is no distinction between the business owner and the business. That is these are some of the features of sole proprietorship business. Let's look at partnership. This partnership business is an entity in which two or more individuals share the ownership of the business. The owner of this business are called partners, and they come together to form this type of business, and they put their money together, which is known as capital. They put their money together to start this business, and they are to share the profit of this business. And let's look at some features of this business. There must be an association of two or more persons to carry on a business. That is, I say, two or more people will come together to form this type of business. The owner of the business are personally liable as individual for the unpaid debt and other obligation of the business. This is just like a sole proprietorship business. The owner of this business, they are liable to settle any liability of the business. Number 3, the profit of a partnership are shared between the partners. As I said, they contributed their capital, and in case of profit or loss, they have a what we call sharing ratio. So they have to share this profit or loss between them according to the sharing ratio. When a partner dies, the partnerships come to an end. We have 2, 3, 4, 5 people that come together and start this business. So whenever one partner dies, what will happen to the business? There is high possibility that this business will come to an end because of what happened. So the business might come to an end. And also, the disagreement between the partners might collapse the business. So these are some of the features of partnership business. And the number 3 is company. This company is a special form of business entity. Nearly all companies in the business are limited liability companies, which is limited by share. What this means is that the owners of this company, they are called shareholders. Called what? Shareholders. Their liability is limited by the shares they bought, or that is, let's say, the money they invested in that business. Is what this means. And ownership of the company is represented by ownership of shares. A company might issue any number of shares depending largely on its size. This means is that a company might decide to issue shares to the public. That is, if it's listed in the stock exchange, and it depends on the size of that company to issue these shares. This what this means. So now we are going to look at compare these 3 types of business entities we have. We have what into, let's say, at the advantage advantages and disadvantages of types of business entities. So we are going to look at the advantages and disadvantages of these three business entities we have. Let's do it this way. We have a business structure, we have sole trader, we have partnership, then a company. Okay, we have a on buy. So the sole proprietorship business is owned by, where say is one person. Here is several individuals. Is owned by shareholders. This is the first one. And number two, liability. The liability of that business, what will happen to it? In under sole trader is what? Personal liability of ownership. This is personal liability of owner. Under partnership, the same thing. Personal liability of owners. Here is under company is limited. Number three, management. This business is owned and managed by one person, who is the owner of the business. This business is managed by the owners in some cases. Then this business is managed by professional managers, which are hired by the shareholders. And number four, capital in this case is contributed by one person. Here is several individual. Here is shareholders. Then financial, number five, financial account and auditing. Under sole trader, there is no statutory requirement to prepare financial statement, but you will need the financial account or auditing for the purpose of taxation. Same thing apply here. Taxation, and this is required by it's a statutory requirement under a company, that company has to prepare their financial statement. Okay, this is where we come to the end of these types of business entities, and This is the end of chapter 1 of this course, which is financial accounting. Thank you.